Hey everybody. So I did open up early. I did this just to give Matt an opportunity to come in early if he could. That's fine. He might not come in until right on time. So I'm going to give this an opportunity to tell you guys what could have happened. So yesterday, for whatever reason, I sent out a tweet thinking that today or yesterday was the day that the space was going to happen. I don't know how I got it mixed up. I got it mixed up with a different conversation, something, and the time zone differences. The power went out, and I only had 5% remaining on my phone, and I had absolutely no other connection because the Wi-Fi needs power, right? So I was pretty much screwed. So what I could have done is probably got data and then did that way. Long story short, though, since Matt is here, the power eventually did come back on, but it was I was out of power for like 7 hours. Matt, I sent you a invitation to speak. Well, Matt, how you doing today?
Good, man. Good morning. Can you hear me?
Yes, sir. So today's special, guys, because I wasn't supposed to have a space until 1 hour from now with Redline Drifter. This worked out for Matt, so I decided to just combine the two. And so, Matt, yeah, I know we're going to hear about your proposal. That is it voting right now, or is this something that's just on Agora? I think we're voting on it, right?
Yeah, so me and Demon put the prop up and it's up for voting right now. Last night took a little bit of a beating, but it'll be all right, Still got 7 days. We'll see what happens.
Well, are people are against extra money going in the community pool? I mean, what's the big gripe?
Yeah, I think it's more along the lines of the burn boys. They want to keep it burning, but to me and I mean it just doesn't make sense, man. We're just burning our own money away, when we could be using it. The chain is on the verge of adding another zero here. And, it's just burning is not getting us where we need to go, man. We need to get some funding together to where we can start having some money where we're not a broke chain. So that was kind of the purpose of us putting that up. When Demon first created the proposal and shot it to Ed to give to Binance, it was 50-50. But being that we already had the 90-10, we didn't have to go through governance for that. So they ended up putting it like that. So but the original thought process and the original way that it was calculated was supposed to be for 50-50, man. That would give us plenty of funding to do what we need to do. It's just, we'll see, man. We got 7 days. We got a lot of time in between now and then. And hopefully the community can come together for a common goal and, get us some funding together so we can, start doing some stuff.
Gotcha. I want to reiterate, Redline Drifter is going to be on less than an hour now, but top of the hour next hour. So, Matt, I heard you guys talking about this months ago. I think when the the task force, the Layer One task force, was even a concept, you were talking about this already back then. Um, was this something you guys came up with, or is it something you were thinking about prior to that time? Because the first time you guys mentioned it was back then, but now it's getting implemented.
Well, the original thought came from Demon, and he had talked about it for a while, and then I started pushing him. I'm like, yeah, when 10983 came out and I saw the community was heading in the wrong direction, it was like we're gonna be reminting 50% of the burns. Like it just didn't make sense to me. So we came together, we sat down, came up with a few props. One was the gas fees. Someone ended up putting that up, and they went 5x. We were kind of wanting to go more aggressive there too, which is still something we can explore. But the original thought came from Demon, and like I said, him and Ed came together and made it happen. And here we are with the 90-10. But the problem is like the funding for a minute there was looking like there wasn't going to be enough when they were talking about putting together Q2 together to prop up. And now we have, I think, what, 130,000 in there, something like that. They do have a little bit of excess, but it's what if the price drops dramatically and
So, given current volume, and I know you guys have some figures somewhere, given current volume, what would you expect to be put in the community pool on a monthly basis with after this passes versus what it is right now?
well, for every quarter, I was hoping it to be around 350K, 400,000 that we would have if this would pass. So you could put that into perspective per month.
Gotcha. Okay. What's that?
So I'll talk on behalf of that. I know this is Matt's podcast, but some of the questions probably have to go towards me. Just about the prop. So when we did the calculations, when I sat down, I did them first, then I did them with Edward, Kim. Is when we did those, we took the lowest. We went back through and found 1 week. We actually found the lowest volume to date, and we multiplied that times 90. So we could get a nice average, not the spikes up or anything. We found the lowest volume possible and did our calculations off of that. So what the 0.2% would bring in, and then we cut that in half, and that's what would be in the community pool. So after the 90 days, okay, after we paid for the community layer one team, we would have an excess of around 270,000 fiat. And that was done at 3015. Okay, so that it's still in the ballpark of kind of where we're shooting price wise as. So we went really low on price and we went and found the lowest volumes to date. So after a year, we did the calculation and what we'd have left after our expenditures. So right now, all our expenditures, well, at the time, we're just layer one. We'd have right at $1 million. It was like 900 and like something thousand, like 970 or 980,000 in the community pool after the layer one expenditures. But that was at 3015. Now, if the price drops in half there, you can see now where that drops, right? So we'd only have 450,000 in there. Well, now take 40% of that away, because that's what we're getting right now is 10%. So if you do that, that's where these percentages really are important. So the 50% was at a price point it was calculated in if the price ended up dropping a significant amount to where we could still, at that point, at 50%, we would barely have enough money to fund layer one and have a little bit of extra. And that's why it went as high as 50%, but not over. And that's why we kept it at 50% and not slightly lower, like 40%. Because at 40%, when we were doing the calculations, we would be running into not having enough, not being anything left, and not even having enough to cover the full bill. So that 50% mark was a nice in between, and it seemed like the fairest option to go forward with community wise, because now everybody's on equal footing, right? So 50% is going to the portion of the community that likes burns still, and then 50% is going towards the community pool for utilities and layer one and any other expenses that we have. We actually have a lot more expenses that nobody talks about that are being covered by other individuals or other entities right now. And at some point, we have to pick those up, and we don't have the money for those. So we need to start getting money in to pay for those things. So that's kind of the reasoning why we went with the 50-50. It had multiple reasons, money wise, if the price drops, but also just fairness. Um, it's just fair for everybody.
Yeah, we
Gotcha.
kind of, we want to have it to where like, we're not like a oh shit moment. We run into a hurdle and, we don't have anything backing us up and we have to make, drastic measures to do what we have to do. We have a lot of issues, man. Like Demon was saying, people are hosting the endpoints and the blockchain needs to be self-sustainable, and that's what we were trying to achieve with upping it to 50-50. So, like I said, there's still 7 days, man. We'll see what happens. We got some other ideas if that doesn't go through, but we'll continue to push forward, man. It is what it is.
I haven't looked at it yet. How's it doing at the moment? It's only been up for what, 24 hours? Is that right?
Yeah, and one thing I learned last night, we still have some pretty big whales in the community, man. We had like a 32 billion no veto, and I was looking, I was like trying to check for the validators, but it wasn't a validator. So we still have some pretty big whales in the community that are holding quite a bit.
Wow, that's a lot. Yeah. So Matt, outside of this proposal, I mean, the proposal seems pretty straightforward. I don't think there's anything complex about it. And I mean, on this particular proposal, what else can you say about it, other other than what we've already said?
Just that, I mean, we need it, man. We need funding. That's what it boils down to, man. This chain is in a, it could be in a better spot. It's we're at major support right here, which I'm hoping we do bounce and the market kind of corrects itself. Everything's kind of going off of Bitcoin right now, and Bitcoin kind of wet the bed this week, so we should bounce back. But ever since that 1.2% tax, man, it's just been going down with price wise, and a lot of people are saying it's because of the 1.2% tax. And people need to realize, even with the 1.2% tax, the amount of time it would take for us to burn down the supply, it's going to be just an asinine amount of time. And, if we can actually take the money instead of burning it, that we're actually, we're just burning our own money right now and use it to create, you know, help fund layer two dApps and get a percentage of what they're doing and use that to fund the community pool burn. We got to start looking at the Oracle pool, man. That's kind of being pushed off to the side right now, and that's going to become a real issue for us here in the future. And we just like to plan for the future. We don't want to be caught with our pants down. And that was the thought process of getting us some funding and coming up with this 50-50 split.
Yeah, I think the Oracle pool probably needs
Yeah.
to be addressed by the end of the year, in my opinion.
Well, that's one reason we're doing this also, Jerry. So doing the 50-50 anti-handler split, it gets us enough money in to where we can start funding layer two development on the chain itself. When we do the layer two development, we can actually negotiate with those layer twos. We're competing with other chains, right? Because that's what they're doing, paying for layer twos. It allows us to compete with those chains in that aspect. It allows us to do some negotiating with those layer twos, as in, hey, we want 5% profit sharing once you guys are up and running on the chain since we paid for it all. Now, we do that with multiple layer twos. Now we have multiple sources of income coming into the chain to where now we don't have to rely on the tax itself. We could go 100% burn again on the tax or just do away with it completely. But now we have all these other sources of income to where we can allocate some of those sources, 5 dApps to the Oracle pool, 5 to the community pool, 5 of those dApps, the 5% that we're getting off it goes to burning. And we can keep doing that. But now we have multiple income sources to fund the different pools that we need funded and to increase burning on top of that. So another way to also look at it is from a business standpoint is when you go and try to get money from partners, from investors. Okay. You have a business plan, business strategy. You're going forward. You're looking for investors. The investors are always going to ask you, how much capital do you have in the game? What have you put into this company? And where has the money gone? And what are the figures like of your return? They're always going to ask you that. Well, right now, we don't have any skin in the game. That's why you don't see big investors coming in. Big investors are going to want to see this blockchain making money and having money to sustain itself before they come and invest. Why would they come and invest and build a layer two if the foundation might just crumble underneath it and go away because it doesn't have enough money to sustain? So that's another big reason we need money in, because other layer twos that we're not paying for, other big investors, whales, they want to see that it's sustainable, that we are doing something business wise of running our blockchain to where it can be sustained for the long haul, to where it's not just a meme coin where whales come and pump and dump this thing, but it has true sustainability. And they're always going to look for that. And that's why we need money again. We need money for a lot of reasons. If you go back to Terra Luna, right, you see Terra Luna on all these soccer matches around the field. Well, those got paid for like, I think 5 years. But that came from the community pool. We need money for marketing. We need money. We need so much money that even at 50%, can we make it work? Yes. But do we actually need more? Like the 0.2%? Do we need 100% of it? Technically, yes. Because we have so many expenses that a blockchain has that we're just not covering right now. But eventually, our parents aren't going to be paying the bills anymore, and we're going to have to move out and pay all this shit on our own. And we need to be ready. We need to have money, different sources of income coming in, and have some in the bank when that day comes, because it's coming sooner than later. But we can fund that Oracle pool, that exact issue right there. That's another way of funding. And then we come out with the gas increase of 35%. Well, actually, a 35x instead of a 5x. 35x is, we could go up to 50x actually, but let's do a nice in between. And then as volume increases and price increases, we can actually bring that percentage down. But that will take pressure off of the Oracle pool itself, right? So it'll keep less of that Oracle pool from it'll keep the Oracle pool from draining quite as quickly. Very small amounts. I've had this argument. Very small amounts from the gas fee goes into the community pool. It's very minimal. So people are like, "Oh, why don't you just raise the gas and not do this tax thing?" Well, the reason is because the way the gas is split, it wouldn't. We'd be waiting years and years and years to get enough money from the gas itself to fund things, unless you do like a swap mechanism. So if Redline Drifter, the next guy up, he comes up with a really good ass plan, is able to turn on that swap mechanism again, with the remit and burn. That swap mechanism is what actually funded the Oracle pool. That's why we have so much money in there. So during the DPEG, so many people were swapping like fucking crazy that it filled that pool up really quick, the Oracle pool. So that's another aspect that can be worked on to help the Oracle pool. But to give it a break would be the gas fee. And another break would be to have our funding, community pool funding, to where we can increase the volume on chain, which is done by utilities. And those utilities, we can have 5 to 10% profit sharing, and we can send that to the Oracle pool. So making it inflationary instead of deflationary, to where we're having more going in that's coming out. And I'm out.
That sounds bullish to me. So, Matt, have you been following the charts lately? I know you've been working a lot, but have you had an opportunity to look at charts?
Not really, man. I mean, it's just typical bear market. Like we'll have these little spurts where Bitcoin will go on a run, and now she's coming back down. So it's just now's the time to build, man. Now's the time to get layer twos launching on this blockchain, man, so we can be successful when the bull run hits, man. We have to set ourselves up now, or we're going to set ourselves up for failure, man. So I haven't been watching the charts like I should been. To be honest with you, when a few little things were happening with like USDC and stuff, and these exchanges started failing, like FTX and all that, I started getting pretty liquid, man. And I've been buying the dips on certain projects that I believe in long term. But um, to me, right now, it's just dollar cost average as much as I can, and just wait for the next bull run.
Yeah, I personally think the next bull run is probably about 2 years out. Like I'm looking at 2025 personally, but I do know that Bitcoin had a support of 28,500, and it broke through that support, and now I think it's currently below that. It's like 27 something, and I can't recall, but I think the next line of support is somewhere around 26.5, and then 25,000, something around there. Um, if it follows along with the trend that the S&P 500 and the Nasdaq are probably going to follow within this quarter, we could be in for a little bit of a crypto winter for at least for a period of time. Have you followed that? I mean, I think that there's a possibility if it breaks 30,500, it could be nice, right? But if it doesn't, and it breaks the downside and breaks those support levels, it could go back down to some previous lows fairly quickly this quarter. And this quarter might be very upsetting because a lot of people don't realize that the government hasn't printed extra money to get funneled into the markets.
Yeah, I would say you're pretty spot on, Jerry. The thing about um, the bear markets, though, the beauty about them. So, say the next bull run is 2 years off, and you're just a regular Joe that works a 9 to 5 and really can't afford a lot to invest. Well, what he can do is take a little bit out of his paycheck each week, whether it be $40, $50 after 2 years, man, and you're investing and buying dips. That really starts to add up, man. And when the bull run hits, you'll be sitting on a nice little pot of cash that you would have never thought you had access to. So that's the beauty about the bear markets. They really give everybody the opportunity to stack their bags, man. And that's what I've been doing the past couple of bear markets, and they always seem to work out pretty good for me, man. I mean, as long as you pick projects that are legit, do your own research, and all that good stuff, because some projects won't survive, man. Um, we saw a bunch of projects already this year and last year that just couldn't make it. So as long as you're doing dollar cost averaging and really like diversifying your portfolio, not bear markets are great in my sense, man. The price sucks, but it just gives you a good buying opportunity.
So Matt, when you were younger, did you ever ask your
Hey, Jerry.
what's up, Diva?
Sorry to interrupt. You can drop me now. If you guys have any other questions, I'm sure Matt can answer them. I was just coming up for those specific questions, my brother.
Okay,
Yeah,
no worries.
appreciate it,
Great
Demon.
space. Thanks,
Yeah,
Jerry. Thanks, Matt.
cool, man.
All right, Matt. My question was, when you were a kid, did you ever ask your parents or talk to your parents, like, or just wonder in your mind, why didn't you buy Apple, or why didn't you, why didn't you get into these things when they were lower value, right? Because there's some experts that are saying that this the market's going to be get as hit as hard, or it's not like no time in our lifetime has the market going to be getting hit this hard. That's what I'm hearing. So we're looking like Great Depression style, like potential crash, and not necessarily saying that it's going to be as bad as it was back then, but as far as the market goes, it's going to provide opportunity for people to buy in at lower prices across the board. I think gold's probably going to do the inverse relationship to that. I think gold will just fly and get really valuable. But I think what you said about the DCAing and just putting in what you can might actually be the best way to go for many people. I mean, I'm probably going to have to do that myself. I know that I'm planning for that because I think Bitcoin is going to hit some lows. What do you think, Matt?
It's possible, man. I mean, you have to be ready for anything, like we were saying with the crop. You have to be ready for whatever life throws at you, and you know, to say like you don't even have to buy every week. Like even if you're just that Joe that works a 9 to 5, like we said, and you put $40 away a week, and the market's up, 10, 20% the past 2 weeks, man, just kind of double up, get $80, $120, and when the market takes a good dip, then you got $120 to buy the dip with it. It's there's a lot of different ways you can go about doing things that can help you capitalize on these bear markets, man. And to answer your question, like about my parents and stuff like that. So my parents weren't real big investors. I can tell you who got me into investing, and that was my grandfather. And it's really funny because he's the one that actually got me into crypto. um, so back when I was a kid, he was a businessman. He got his he always had a computer, from when I was coming up as a kid. And give me one second. So when I was a kid, he always had a computer growing up, and one of his favorite things to do was to go on and check his CDs and stuff like that, and his stocks and stuff. Well, he would get me to go with him and help him uh, log in and do all that stuff because we were still on dial up at that time. Well, fast forward a couple years, and then crypto comes around, and he started to dabble. He was buying. He got some Bitcoin, and you know, for a while I was like, cool. It's cool. You got some coins and stuff. Well, after all that happened, years went by. Of course, he passed. I think he lost a lot of the Bitcoin he had with the computer. I think we ended up swapping them or whatnot, but we ended up losing what he had. And then, years go by, and I'm sitting watching. I'm like, dude, Bitcoin's at $1,000, like, and I remember that from when me and him would sit down and go over investments, and he was trying to like, I didn't know it then, but like he was trying to school me up to be a man, like teach me about how you need to save and how you need to invest, and if you don't want to work the rest of your life and all this stuff. And I really didn't understand it back then, but I still have the memories, and the memories are what drive me to do what I'm doing now, which is investing, trying to teach people. That's why I was involved in YouTube. I didn't do YouTube to make money. YouTube doesn't pay jack shit, man, to be honest with you. You have a few good months where you can make a couple $1,000 and stuff, but it's really not paying my bills. The main focus was I I got some, life-changing money through like AMC and a few different cryptos and stuff like that, and investments. And I wanted to teach people what I was doing because it was working for me. And kind of like my grandfather did for me. He taught me the ropes. I didn't really know what he was teaching me at the time, but when, the sun came up and I realized what was going on and I had this knowledge, I just kind of wanted to give it back to people to help humanity. So that's what got me started on this Twitter journey, this influencer journey, if you want to call it. But the main goal was just to set out to help people, and that's end of the day, that's all I'm ever gonna do, man.
I hear you. Yeah, the algorithm on YouTube might be changing. Have you noticed a change?
To be honest with you, man, since Lunar Classic has taken a hold of my life, I haven't been doing too much YouTube, man. I just, you know, I got to find a nice balance because I still work a full time job. I have 4 children. I got Luna Classic, I got Twitter. You got to try to balance everything because if I didn't live the life where it's unbalanced, and it's not a good one. So you definitely need to balance out the things in your life. Make sure you get out there and remember what's real, and get out, touch some grass, spend time with your loved ones, man. Because end of the day, that's all you ever got, man. Yeah, we got this community and we got our investments, but the most important things in life are coming home from work, man, and watching your kids run down the driveway to hug you. You got to remember the important things in life.
So I think what a lot of, as far as the market's concerned, I think a lot of people aren't paying attention to the fact that there isn't more money getting printed. We're like in a zone of we can't print more money because it might cause hyperinflation. And then you have the Fed themselves saying, telling everybody prepare for a mild recession. And when you hear the Fed say mild recession, that they don't like to use any type of descriptive words at all. It seems like it could be worse, and the market, for whatever reason, has ignored that, right? And
Well,
interest
the
rates are
Fed
going to
always
go up.
seems to the Fed always seems to be like 6 months behind on reality, man. So I knew back when we had the what was it, 2 quarters of negative GDP, and they were like, "Hey, it's not a recession," and then the third one came in slightly above, just because I don't know what happened there, but they were trying to push it away from seeing a Great Depression, with 4 consecutive quarters in a row, I think, but um, the Fed seems to be like so far behind, man, and to me, we're already in a recession. I was saying that back when we had the second GDP quarter of negative growth. Um, so what do they mean now? Could it be getting worse? I mean, to me, the signs point to it getting a little bit worse, man. And it's not just with the printing and all that other stuff. I mean, you have a coalition of countries right now that are trying to get off the dollar dependency, and we'll just have to see how it goes, man. No one has a crystal ball, but if things could get worse, now, in my opinion, now would be the time for it to happen, and that's not necessarily a horrible thing, because terrible markets create great opportunities, man, if you just know how to capitalize on them.
So, well, how do you feel about the housing market? Because do you foresee another potential 2008 type bubble coming as well for that?
It just depends, man. It depends on a few factors, like how bad is the economy really going to get? Are we going to start losing jobs, like getting up to points where like the Fed wants us to get with job loss? Um, because people lose their jobs, then they can't pay their bills, then they lose their house, their car. It just depends on how bad things actually get here. I haven't been keeping up with the job numbers too much, um, but I hope the unemployment rate doesn't start going down. I don't agree with the Fed's tactic there to try to battle inflation. That's just my opinion. More people working is better for the economy. Because what are we going to do, man? Are we going to live at this level of inflation? Are we going to continue to just beat down on the economy by raising rates? I mean, you've seen what happened. All these banks that were getting into trouble because of these rate hikes. It's such a and it's not so much different than Luna Classic if you think about it, man. Like it's just economics 101. Where you can get in a bad spot, but you're always able to pull yourself out of it if you have the right people and you make the smart decisions in the times that are needed the most, man. And I got faith in this community. I got somewhat of a faith in our. I don't have much faith in our government right now, but hopefully that'll change in this next election. But yeah, some things definitely have to change, man, because we're heading down the wrong road right now in a lot of aspects in life. So
Well, fortunately, I think after the next election is when we're going to start recovering, but I don't think it's going to be an immediate bounce. I think it's going to be one of those slow recovery uh, things because you
yeah, and
can't won't be able to print money.
you when you have to look at it like this too, Jerry, what happens in between now and then? Does Taiwan get invaded by China? Does North Korea accidentally hit somebody launching all these missiles that they're launching? Like current world events are going to be big factors in moving the market, man. And right now, I don't have a lot of faith in our government to what's the word I could say, to make these guys kind of shy away from doing the stuff that they're doing. Um, so it's really going to be an interesting year, man. That I can tell you. It's going to be very interesting to see how this year plays out.
Well, I can tell you a little bit of news about China because I'm over in the Philippines right now that you probably don't hear in the U.S. Um, they have a overbearing presence in the China Sea. Now, there's sections of the China Sea that is essentially the commercial, uh, the commercial authority of the Philippines, so the southern part, and some other countries here and there. It's almost like they're challenging it, like they want the China Sea all to themselves, right? And there's actually going to be some temporary U.S. bases. One of them is going to be in Palawan, and a couple more on the main island as well in the Philippines from the United States. And they're doing training exercises here now too as a show of force. A lot of people probably don't realize that that's going on. There's already things that are, you know, we're not going to war with China. That's not what it is. It's just they're kind of pushing their strength south in the China Sea towards the Philippines. There have been some pretty key events that aren't so cool where that have happened to ships that belong to the Philippines, where the commercial ships typically. And that's been going on for the last several years, and I didn't know much about it until I came here, right? But now I'm seeing it all the time. And these are things that you don't see in the U.S. You don't see because we're dealing with all, what did Bud Light do? Like we're talking more about that than we're talking about things that actually matter.
Yeah, man, I have to agree. And Bud Light situation is actually pretty different, man. I've never seen anything like it, so we have to
I
see
mean,
what
I know
happens with that.
it's something to talk about. I get it, but it just seems like I think like the conversation about Taiwan and the conversation about the sovereignty of the the commercial sovereignty of the Philippines and the other countries that are around here in the South China Sea, they use that area to fish and for economical reasons. It's like it's their economical sovereignty. They use that portion of the sea. I think it's essentially international law, and they're encroaching on it. They literally had like 70. China had like 70 plus boats parked in an area, and they were just sitting there. But they're commercial boats, but they weren't even fishing. They were just sitting there. Kind of weird, but yeah. I mean,
Well, like the thing is, like what I was saying about like how I don't have trust in our government right now. If we had a strong uh, presidential cabinet and a really strong government, um, the rest of the world wouldn't be acting the way they do. The United States sets the bar, it sets the standard. Um, and as soon as the world saw our withdrawal from Afghanistan turn into a complete nightmare, they looked for any weak links in the chain, man. They saw an opportunity. And that's why I think Russia decided to go into Ukraine. And sadly, I hope it doesn't happen. I pray it doesn't happen. That China doesn't take the opportunity while we have a weak administration to go ahead and, try to sink its teeth into Taiwan. I think the only thing stopping them right now is that Joe Biden actually said that we would defend Taiwan with boots on the ground, we would be there. So, like I said, man, 2023 is going to be definitely interesting. We'll have to see how the rest of the year plays out, and hopefully, for the sake of humanity, we can all come together and come to agreement and just get things back on track.
well, I mean, essentially, we wouldn't even need boots on the ground unless boots on the ground mean three aircraft carrier groups. Because I think a lot of people don't realize how many aircraft carrier groups the U.S. has and how many they have in development. So there's 11, and there's two
Yeah, I
almost
think they have
completely developed.
another two or three back in development right now.
Yep,
So yeah,
that are bigger.
we lead the world in that aspect. China may have a bigger navy, so say, but I still think it's quality over quantity there, man.
We got a bigger navy. We got more ships. We got more planes. We got more everything than anybody else in the world, actually.
I don't know. I was reading the other day that I think they had surpassed with the amount of ships they have. Double check me on that, but I'm pretty sure I was reading that from a credible source the other day.
You might be right. However, the technology isn't there because they have old technology aircraft carrier groups. They only have two, and I know they're building, so they might have more than what people are saying they have, right? Um, and we're getting into a different type of discussion here, but it's cool, right? But the thing is aircraft carrier group is over 70 ships. It's not just an aircraft carrier. It's an aircraft carrier. It's got subs escorting it. It's got destroyers escorting it. It's got support ships all over the place. Like, it's ridiculous how big it is, right? And you control the sea. You control that commerce. China makes a lot of money exporting their goods outside of their country. So I think there's a heck of a lot more at play. I mean, we've been at an economic war per se with them more so than anything. I don't think a direct conflict is in anyone's best interest.
Yeah, not to say we're getting too far off a topic because like current events in the world, man, that plays a big factor in your investments. Like it really does. Like I remember when Russia first invaded Ukraine, how the markets reacted that week. You know, it was bad. So to kind of keep that in mind and the type of market that we're in, you got to kind of look forward to so you're not caught off guard, man. You know, you got to look at the potential that this could happen and your investments could take a pretty good dive off these current world events. Now, some things are, unpredictable, but the stuff you can't predict, you try to predict. And if you get it right, great. If not, learn from it, move on, and always continue to learn, man. I try to learn something every day. That's still something I try to do. I think my dad taught me that. He's like, dude, whatever you do, just it's one thing a day you can do for yourself is just try to learn one single thing, and you'll be that much better off tomorrow. So that's still something I hold strong.
I think we do live in a very exciting time as far as the news cycle is concerned because I think over the next couple of years, there's going to be all kinds of very surprising things happen.
Yeah, and like I said, man, I'm just looking forward to the next Bitcoin halving and next bull run because that's going to be some exciting times. And in between now and then, I'll just be here buying the dips, trying to help Luna Classic best I can, and just raising my family, man. That's what I'll be doing.
Now, that halving's happening in 2024. Do you know what month it is expected to happen?
Not right offhand. I think it's early 2024, but it just depends on the block height. So I could look into it. I can DM it to you, but I'm not exactly 100% sure, so I'm not going to say.
Right. It also depends on volume because increased volume will make it happen sooner, and then decreased volume will make it get prolonged. But I'm assuming Bitcoin, like, it's kind of funny. I mean, I know it's going to follow a big percentage of what the Nasdaq does, but there's going to be a breaking point when it kind of rebounds and does its own thing.
Yeah, there was a few instances between the last year where, Bitcoin kind of went off and did its own thing compared to the rest of the market. And then sometimes the market shot up and Bitcoin was going down. So to see it kind of separate itself a little bit, especially with all the inflation data and what the Fed was doing, to kind of see it separate itself a little bit. It wasn't a whole lot, but there was times where you saw little sparks where like it was like, oh shit, it's acting as a hedge against inflation instead of a risk asset. Hopefully we'll see more and more of that um, as the years roll by.
Let's swing back to Luna Classic real quick. Now I have Redline Drifter. He's waiting for his time to come on, and he's going to be talking about the repeg. Now, with your proposal of the 50-50 split, right? Let's just say the stars align, everything good happens, the repeg's in. How does that affect the community pool in that aspect?
Well, like Demon was saying earlier, it should help to fill it. And I can't tell you, dude. I'm really interested. I missed Redline's AMA he did the other day. I caught it late, and I got in there the one he did with Clan, and I didn't go back and listen to it. So this morning I was gonna, after we finished up, I was gonna sit down, relax, sip on some coffee, and really dive into it. So I'm actually really interested to hear what he has to say on this podcast today, man. And once I have the full understanding of what he's trying to do, I'd probably have a better understanding about how it would affect our current setup that we have for Luna Classic.
I hear you. Yeah, this profile I'm blocked by Clan, so I couldn't join it when it started. I think what I'm going to have to do is ask Redline if his explanation in my podcast is superior or not, or if there was some things that I could learn from the other one. I can go in on one of my other profiles because I have one for Luna Sapiens, and then listen to it from there, maybe. So you weren't blocked. I thought you were one of the ones that were blocked.
No, I wasn't blocked. So I was able to tune in, but like I said, I got in there late. And look, if we can come up with a plan for USTC that actually works, man, I would be 100% behind it. I really would. It really scares me, man. If this isn't done properly, we're not going to get too many more chances as blockchain to come back from an event that happened, which the anniversary is coming up. So we have some smart people, man, in this community, and hopefully we can come up with a way to make this happen. Because if we do, man, that would be a big deal for Luna Classic, man. That would put us back king of the cosmos once again. And do I want to see it happen? Yes, but I want to see it happen properly, and I don't want to see it rushed. Rushing this thing is the worst thing you could possibly do. Like, you need to make sure you check, double check, triple check, make sure you have everything in a line, because once this thing starts to open up, and if it works well, man, that could put Luna Classic in a damn good position to start heading back towards its glory days, man. That's honestly what I hope for every single day for this blockchain, man. That's why we work so hard to try to protect it and maintain it, and try to plan for the future, man. Because that's the beauty about a community, man. Some people want to do this, some people want to do that, but if they can all kind of come together, and the music matches per se, we can create something really beautiful, man. That's honestly what I hope happens here.
Yeah, I think there's going to be a point. I don't know when it's going to be, but there's going to be some point where Luna Classic is doing something the rest of the market's not doing. Right? It's going to be going up while the rest of the market might be going down. And I say this because there's a lot of things in Luna Classic to be bullish about in the future. Repeg, you guys are planning ahead with the 50-50 split. The thinking about the Oracle pool as well. I mean, that is a huge thing on people's mind, is the Oracle pool, and I'd be interested in knowing a little bit more about that. Are you guys planning on writing a proposal concerning the Oracle pool, or is it just you guys are going to wait and see after, with this proposal first?
Well, the plan right now, I mean, we have a few ideas in mind, but nothing proposal ready. So, um, I'm waiting to see what Redline. That'd be a good question for Redline when he comes up. Concerning the Oracle pool, like what his plans were with that. So, as of right now, I don't personally, but it is on my mind, dude. That's going to be a problem, and I think we're going to have to address that this year, because we need to we need to make sure that we're attracting investors with a high rate of return and good rewards. And as that thing just keeps getting depleted, over time, we're going to be less competitive on that edge, and we don't need to lose that, man. We need to build and burn and prosper, man. And that's what we're here. That's what we're trying to do.
I like that. Build, burn, and prosper. Some pretty good words there. Now, I don't know if someone else has already said that, or are those your own terms?
I don't know. I just came up top of my head just now. So if someone else did say it, sorry, but yeah, that just
I
came to mind.
I want to say Lunk Dao said something similar, but it wasn't didn't sound as cool as that. Now he's probably in here. He's probably going to get upset I said that. I don't know if he's in here or not.
Well,
But
Jerry, real quick, I know we're coming up on the end of the hour, man. But I heard that you were going to be a father, man. Is that accurate?
yes, that's accurate. Yep. So
Oh,
she's
congratulations.
thank you. Yep.
I'm glad I got to uninterrupted and tell you that, man. So happy for you, man.
Thank you. Yep. She's about a month pregnant right now. Maybe a little more. Don't know exact when the due date is yet, but yeah, it was. I mean, I can't say it wasn't planned. I told her I wanted to, it'd be better if we were married first, and we got married, and then it happened afterwards. So I guess that was just the way it was intended.
Oh, awesome, man. I'm very happy to hear it, and yeah, kids are blessings, man. So enjoy.
Heck yeah. All right. So Matt, we didn't really cover too much of how you got into crypto. Usually we'd cover that at the beginning. I guess I got a little bit excited about your proposal, and I went right into it right away instead of actually doing any type of introduction. But if you can tell us how you got into crypto, and then we'll probably transition over to Redline.
Yeah, so my first dabble, like I said earlier in the AMA, was with my grandfather. But I started buying ETH back in 17. Um, I had a buddy who was like really big into it with work, and like I was always checking stocks. He was always on crypto, and come Friday, man, I'd be upset because I couldn't, swing trade any assets. And then I was like, well, crypto's 24/7, so I started buying ETH, man, really cheap, and I still have that ETH I bought in 17, man. I never got rid of it. Um, I'm holding that long term, but yeah, just a buddy from work reignited my passion from when I was a kid. With investment, uh, with the crypto side. I was like, my grandfather was onto this, man, and you know, and then when I started working with this guy, and we got really, really close, and he was trading crypto all the time, man. I was like, heck, I hopped on board, man. Started buying, and then everything shot up like crazy, and I was like, oh yeah, dude, this is right up my alley. So ever since then, man, I've been here, just buying, selling, supporting everybody, just doing my thing, man.
Well, I know the volatility is very attractive to people that day trade. Is that anything that you've ever done?
Yeah, so not so much this past 7 months, man. I kind of laid low, um, but for a long time, man, like I swing trade a lot. I'll ride buy the hype, sell the news, man. All that good stuff. And um, it's that's a great way to dollar cost average too, man. Because you can catch the sell the high and buy the low. I'm not saying you're gonna get the exact bottom, but if you can maintain some pretty good percentages from buying and selling and doing day trading, and then put your little pot off to the side, man, and keep stacking your money that you're making from your swing trading in there. And when a real good dip comes, man, I'll dump that in there and hold that long term. And that's a really good strategy that really treated me well over the years that I continue to do to this day. I haven't been so active, like I said, the past probably 6 months, um, doing that. Um, and mainly for the fact that I went so hard for the past couple of years, man, and I made some good money, and I just had to sit down and finally enjoy it. And I guess I'm still enjoying it. So I'll get back to work here shortly, man. It's just nature of the beast, man. You got to remember investments and all that stuff are cool. Being a good human being and being respectful to others and spending time with your family is more important than anything you'll ever find in this spectrum of the universe, man.
Well, I have to agree with that. Well, Matt, thanks for coming on. I'm going to bring up Redline. If you have anything last minute to say, go ahead.
Nope, just thank you, Jerry. Appreciate it, man. We'll talk soon, and I'll be in here and looking very forward to hearing what Redline Drifter has to say. And thanks for the opportunity to come up, man. Appreciate it.
Heck yeah, Matt, thanks. Thanks for coming on and letting us know about that proposal. All right, Matt, if you can just drop down on your own, and then Redline, can you come up here? He might be expecting to come on top of the hour. Maybe he's not there. Redline. Should have waited for him, Matt. I don't know. It's okay. I could probably fill it in with something. I've been looking at Bitcoin a lot. Here he is, guys. Redline Drifter. A red a Redline. Can you introduce yourself and tell us how you got into crypto, and then we'll go into the topics. And I know you've prepared yourself quite a bit through two AMAs and also some very intricate questions, correct?
Yeah, you've sent me a good kind of set of questions there that kind of get more in depth into how it'll operate, and I should be able to answer those fairly thoroughly anyway. So I originally got into crypto. It would have been XRP I originally got into, and I thought that was going to become the underlying system for banking, as they all seem to think. But I ended up getting out when it was up over $1, and I kind of just been trading since that really, and would have been maybe 5, 6 years ago.
Gotcha. And what were some of your first cryptos that you owned personally?
Um, I would have been It would have been kind of a mix of ETH and XRP. I wouldn't have had kind of a wide variation at the start, and I just kind of traded those and kind of day traded them. I'd have always been kind of buying, selling. I found I made more money day trading than holding. I kind of enjoyed it a bit as well. So that's what I would have been doing, and I still kind of do a bit as well. I day trade a bit as well.
Gotcha. All right. So how do you feel about the proposal that is it up? It's not up yet, is it? Or is it going up soon?
No, I'm gonna probably throw it up after this talk. Probably an hour or two after this talk, I'll throw it up. So far the response has been fairly positive on it. I haven't really had any major pushback from anybody on it. I mean, the reason I put this up is because I see a lot of repeg proposals have been put up already, but I mean, a lot of them don't address, the underlying problems we have with our system. They'd either have been open to further debt spirals again, or they weren't trying to bring back the system that we already had, which is like why I think most of us are here, that we believe in decentralized money and that it should be a people's money. I think that was one of the big reasons of the crash actually with Terra, is that, like, if you look at what it was designed to be for, it was supposed to be for remittance payments and for forex, but small amounts of forex, so people could, you know, would be able to use foreign exchange. But if somebody was moving big volumes, that they'd be punished for doing so. Like, we had a Tobin tax on chain as well. So the aim was that if people would be able to trade small volumes of money and do that for relatively cheaply, but if there was big institutions trying to, manipulate the market, they'd be heavily punished for doing so. And the problem is that as Terra grew and say more and more of our tokens were traded on exchanges, then we lost less and less control over our money. So our capital controls in effect became useless. So that's kind of why I'm pushing that we have capital controls in all markets with this one.
Very interesting. So, like, Redline, can you tell us the basic um, description of your repeg plan so that everyone can understand it, and then we'll go into some more of the more intricate details.
Yeah, sure. So it's relatively simple. So basically, it taxes the divergence from pegs. So if, for instance, we were at $1 and the peg was set there, and the price depegged to 95 cent, and you sold there, then the tax would be 5 cent because that's the difference from peg. And so as a seller, you would then receive 90 cent, and the tax protocol would receive 5 cent. And that 5 cent would be then used to collateralize our token and help with buybacks. So, like, if you think about this, the more you depeg, the more collateral we're building in the token because the tax will get higher, if that makes sense. So, like, the more somebody tries to attack the system, the stronger we would become, basically. So this is kind of addressing the debt spiral. Like, with this, you could not have another debt spiral again. Because the tax is dynamic, it goes from 0 to 100%. So if we were to ever get to a 50% depeg, it would be 100% tax. So it kind of prevents the market from ever getting to that point.
Well, that's a very interesting. Is this something that that's the way it was before, or is this how you're doing it?
Well, we would have had Tobin taxes on chain before, which would have taxed the difference between two tokens or the spread between two tokens. So in essence, I'm kind of applying something similar to that off chain. And I'm modifying it slightly in that the tax would only be ever on the seller side and only below peg at the start. So this is just to disincentivize people from selling below peg. And so at or above peg, there'd be no tax, so people could trade freely. So this will kind of help to push the market price up. You know, people aren't going to want to trade below peg; they're going to want to trade tax free. So that will just push trading to them volumes or to them levels. Sorry.
Well, that seems very interesting. I like that. All right, so now, what's the first, like, the process? Let's say that the proposal goes through, it gets passed. Then what is the process after that?
So basically, then we'd have to go and have discussions with the CDXs and see if they're willing to implement it, because this proposal kind of relies on us having our controls on all the markets where our tokens are traded, or it doesn't work. So we would go to the top 3 exchanges and see if we could convince them to come on board. And if we did, we'd then reach out to all the other places that are trading our tokens, and they would be given a deadline to implement or face a wallet blacklist. And that would be it. It would have to happen like that if we want control over our money, and we can't leave any room for exploits. This kind of makes sure that doesn't happen. Like, if you leave an avenue where somebody can trade, if you leave a tax-free avenue or a place, all the trading volume will just move there. So we need to prevent that from happening.
Gotcha. Now, USTC is already traded on central exchanges, so I'm assuming that, and I was under the impression you guys have spoken with Binance about repeg through Ed or through the L1 task force. Is that correct?
Well, I know about my proposal. Is it? Well, I know TGF have reached out to, and Rex, he's actually reached out to all the exchanges on my behalf, and they all have a copy of the proposal. So we haven't heard any no's from them yet, or any yeses. I presume they're waiting to see how the community's going to vote on this before they make any decision. But if they were outright against it, they could have told us no the second they got the proposal, and we didn't get that from anybody. So it's not a definite yes, but it's not a no yet either. Do you know what I mean? So it's still on to play for yet.
Gotcha. So it might be one of those things that is a slow process depending on how long it takes for the communication to be successful.
Yeah, exactly. I really think they're waiting to see how the vote, because it's only an Agora discussion at the moment. I presume they're waiting to see how the community will vote on it. Like, and if it's an overwhelming yes, then they'll seriously consider it. But if it's a 50-50, then they can just brush this off. Do you know what I mean? Now, the fact that we're incentivizing the CEXs with a profit share, they might look at this as a good revenue making stream for them. Do you know what I mean? Because most of them, like the maximum you'll see an exchange charge is 0.3% of a tax, but because our trading fee, but because our divergence fee goes between 0 or 100% to 100%, in DPEG events, we could share with them like many multiples, like we could offer them many multiples of what they normally would make with a profit share. So it could be quite lucrative for them to implement this. So that's my, like, if you look at, I did on my proposal, I've done out a table of the last 6 months of USDC, the USD trading pair. And if you look, even if you were to cut the trading volume below peg by 90%, I mean, we could still offer them multiples of what they normally make. So they have incentive to put this in. It's not like we were going to them before where we're basically asking them to burn their own money, which is what we were doing. We were begging them basically and offering them nothing in return. Whereas here we're going to them with a business proposition and offering them a chance to make more money. So it's different what we're approaching them this time with than what we were approaching them with before.
Well, I think they're going to like that because that's what they're in the business of doing, making money, right? So some of the questions that I've gotten from some of the people messaging me before this was about disabling trade outside of the blockchain, such as swaps and OTCs like futures and leverages and et cetera, right? So shorts and longs and things like that.
Well, I think you could have shorts and longs, but the problem is it'd be quite. It's a lot more risky for the trader who's opening or closing them because they'd have to make sure that they're closing outside of the divergence tax, if that makes sense. Like, so say for instance, we're trading at peg and you were to open a short, and you'll be selling into the tax. So like you'll be at a severe loss immediately. You'd lose opening a short there. So you'd have to make sure that if you were opening a short, it would have to be way above peg level and that you'd close above the peg level, if that makes sense. So like they could still operate, but you'd have to be more careful in how you were trading.
So essentially being in the money would be a lot more difficult to forecast.
With futures, yes. Yeah, it definitely would because you'd have to, if you were moving high volumes, like market moving volumes, then yes, it would be. Like if you're only moving small amounts of money or opening or closing small amounts, it's not going to affect the market too much, then it won't affect, then you can. It's really, if people are moving like you know, if they're going to manipulate the market with the amount of shorts or buys, then they will be punished effectively. But for the regular trader, it won't affect them too much. Do you know what I mean? It's only if you're going to push the whole market below peg with your shorts. Do you know, so a high volume short, it will be difficult to do. Low volume shorts, not so difficult.
So that basically describes, the forecast of what somebody would have to do to short. So now, how can we control and manage who is lending to the short seller so that they can enter the position off chain, or is this something that we're not too concerned about?
This isn't something we'd be too concerned about. It again. Our divergence protocol would be on the market, so second they move the market, they'd be taxed on it. And like you can still move money across the blockchain P2P, you know, person to person, so they wouldn't be affected moving money that way. It's literally only where there's a market swap essentially that the tax will be in place. So like say for instance, if I was to send you a million lunk, there'd be no tax on that. And it would only apply to swaps or CEXs markets essentially.
Now, one of the things that people were doing before with USTC is they were able to, essentially, they were getting it for cheaper, like 97 cents, and they would trade it on central exchanges for what, 3 cents higher or something like that. That happened before the DPEG. Now, is this something that is still potentially could happen or no?
That to be able to get it for cheaper off chain and then trade on chain, is it? But like so, the protocol would be on each effective swap. So if say on Binance you were depegged 10%, the protocol would tax you that 10%. Whereas if you were say on KuCoin and it was only 5%, you'd only be charged 5% over there. It's not consolidated across the board. It's on it'll be taxing on that specific market, if that makes sense. So there'll still be arbitrage opportunities created, but they'll be from Lunk into USDC. I can't really see how you'd be able to buy USDC cheaper, maybe, but this wouldn't really affect that too much.
So it basically increased volume off chain, essentially, and if there was any arbitrage opportunities.
Yeah, well, like if you look at what I'm trying to do with the tax protocol is like, say, some of the money that we'll gain through buybacks. So we'll be using that to fund the Lunk to USDC swap pool, and that's going to create arbitrage opportunities for Lunk. So that'll mean that say when the price moves above peg, so say if peg price was at $1 and it pushed to $1.10, you'll be able to swap your Lunk into USDC, so $1's worth of Lunk will get you $1.10's worth of USDC. Um, and so that will create an arbitrage opportunity there for the Lunk holders. So you'll be able to basically swap your Lunk into USDC, sell to market, buy more Lunk, and that effectively manages the peg and creates utility for Lunk and incentive to hold Lunk at the same time. So it it it's creating utility there and creating that arbitrage opportunity using some of the tax tech.
And increasing volume, which is a good thing.
Yeah, and it'll increase volume both on and off chain because you have to move it. Do you know what I mean? So it will increase volumes both on and off chain when this happens. And it'll be taking Lunk out of supply because effectively you will be swapping with the protocol. So there'll be no minting. You'll be taking protocol owned USDC and it'll be taking your Lunk, which will be effectively out of circulation then. Whether the community decides to keep that for down the line to open up UST to Lunk, have proper limited pools, but both ways. But that'll be down the line maybe. Or if they want to burn it off. Because I have a lot of people asking me, even in my DMs, and they're just saying, just burn it off. And I'm kind of saying, well, if it's out of circulation, it's not going to have any price impact whether we burn it off or not. So I'd be kind of thinking that we should just keep that in the protocol and maybe use it down the line at some point to open up two-way swap pools. Did you get that? Or
Yeah. I'm sorry. I'm thinking there was a question from one of the ones that was sent about stables that already exist. Now, USTC isn't really a stablecoin, though, is it?
Well, it is a stable coin. It's just a poor one at this stage. You see, the problem is that we have absolutely no collateral backing at the moment. We've nothing there to do buybacks anymore. I mean, we'd LFG and Jump Crypto there before that were performing buybacks, manual buybacks to maintain the peg. And so there was collateral backing that up. Whereas now we have nothing, like nothing whatsoever. So what I'm designing here is aiming to replace that and replace it with something better, so that we will be able to maintain the peg properly. But yeah, so yeah, I would say Lunk is a stable coin, and once we introduce this mechanism again, we could make it stable again. The aim would be to try push it upwards to the dollar first, obviously, so it'll probably be a bit volatile on the way up there. But once we get it up there and build collateral, we should be able to make it stable again.
Gotcha. So yeah, I see you guys requesting there. This is podcast. This isn't an AMA, so it's just going to be Redline speaking today. But if you have a question, send him a DM, and he'll get back to you as soon as he can. Redline, I'm going to go ahead and look at the next question there that I have on the list. And could you talk a little bit about now after everything goes through, you explained how it works. Now, are you going to be the only one working on this, or is this something that the L1 task force is going to be working alongside with you?
The majority of this work will actually end up being on the L1 task force's side. Like they will have all the coding in to do. The algorithm side is actually quite simple. I mean, if you look at the maths behind it, it's not that complex. So most of this work is actually going to be on the L1 task force's end. This is what they're going to have to do. And it's basically all L1 work, and I'd say 90% of it.
So
and I have been.
sorry,
Steve.
go ahead.
Well, sorry, no, and I have spoken to them, and they do think that this is something that they can do, and they're interested in doing. So
Now I'm thinking with the different definitions of stablecoins coming out from the different countries. One of them was a 1-to-1, having currency backed. Is that something we're thinking about in the future, and or is there a different method that we're thinking about?
Um, so at the moment, what I'd be collateralizing us with is just other the US dollar backed stable coins. So we wouldn't be actually back. We would be backed by fiat. We'd be backed by a stable that's backed by fiat, if that makes sense. Um, us ourselves, we have no mechanism of storing fiat to back ourselves with, so we have to back ourselves with other tokens. I think the safest way of doing that is to back it with the likes of other stables like BUSDC or BUS. Well, they're going to be gone soon, but USDT or whatever. But other US dollar backed stables. And we can look at, if we open up more trading pairs against USDC, like we can look at my tax protocol of using BTC or Paxos, so like back ourselves with Bitcoin or back ourselves with gold using those methods.
Okay, so all that is possible, and obviously the percentage and how it's managed is going to be something that's out of the scope of a lot of people that are, as far as votes go. Now, uh, when it comes down to the management of those assets, what does that solution look like? Because that's separate of this proposal, right?
Well, no, because the, the protocol is literally going to back itself with assets on each trading pair. So, like, we're not going to go and diversify those trading pairs afterwards. So, say if we're backing ourselves, well, the community can if they want, but that's not something I've designed. So basically, the protocol will back itself with whatever it's trading against. So, if you're trading against BUS or BTC, it'll back it with BTC, Paxos, whatever it is, and you would just hold it in that ratio as it accumulated. And the aim would be that over time we'd start to build up sufficient collateral in backing our tokens. If somebody thinks they can diversify it better, fine. I think part of the reason, I think the safest way is to back ourselves with stables first. And if we can see that we're managing peg levels, then open up trading pairs against BTC and Paxos, but not volatile assets. I think we need to be selective enough in what we open up trading pairs against.
Now, we've heard the terms hard repeg, soft repeg, and the reason I'm bringing that up is when it initially starts, are we looking at repegging to a smaller dollar value, or are we looking at just going for it right away?
No, I'm sorry, can you hear me? No, so we'd be putting pegs somewhere around market price and looking to build up from there and incrementally increase the peg. So we'd aim to do that by building collateral in and then shoving the peg up that way. But if, for instance, we hadn't, say, the price pushes way above peg, say sits at 4.5 cents and doesn't want to go down there, but we haven't built enough collateral to buy ourselves up there, then the peg will automatically move itself up to just under that cent mark. So if it was at 4.5 cents, it would move to 4 cents. And what I was going to do is say it would have to maintain a price point for at least 48 hours. And if it did that, then the peg would automatically move up. And we start to build collateral from at that level then.
Okay, so this is a slow process. How long do you think it would take to get to a dollar in your mind? And maybe this might be outside of the scope of prediction because it probably has a lot to do with a lot of other factors. But in your best estimate, how long would it take to step up to where we need to be?
Well, like if you actually look at the markets, they're not actually very liquid. So I think we'll actually be able to push the price point up relatively quick. I think we'll see 10, 20 cent quite fast. And I think from then on, it's going to get quite hard and we'll see sell pressure as people who bought in from the higher prices start to sell off. The further the price comes up, the harder it's going to be to push up, if that makes sense. Um, so it's hard to it'll be hard to put a timeline on it. Like it's really market dependent. Now one thing I will say is people look at USDC and they see that there's 10 billion USDC out there, but 75% or something like that is actually under TFL control or LFG control. So there's really only 25% of what's actually out there circulating. Do you know, like I'd be looking that we should talk to TFL about getting those assets, or even if TFL was to sell those assets or the government court ordered them to, like with my protocol in place, if they dumped onto the market, like we'd actually take back a lot of those assets through the tax protocol. So it does kind of stop that. And like say for instance, they depegged us 50%. At that point, they're just giving us all the assets. So it kind of prevents a market dump on us as well by them. Um, it is difficult to give a timeline as to how fast we'll reach $1, though.
So it sounds like it's going to be a little bit of a ride, but it's going to be a stable step all the way up.
Well, yeah. So if you think of like a ratchet mechanism, say for instance, like the peg price will be able to push up, but it'll never come down again. So you should see that over time, like we won't see the lower levels once the peg pushes up. It'll effectively at some point become impossible to sell down into those levels again. So yeah, it's going to operate like a ratchet system that over time you should keep pushing the price up and up and up, but it'll never go down, if that makes sense. Or it'll be limited into how far down it can go.
Thus increasing the value of Luna Classic itself.
Yeah, well, the main thing with Luna Classic is that we'll increase the value of it because we'll be reducing the supply through those unidirectional swaps I was talking about. So as we buy back the USTC to try and maintain the peg, like half of that gets sent to or 47.5%, I think I put down, gets sent to that swap pool. And so when the price goes above peg, that limited swap pool will open and you'll be able to trade your LUNC for a profit or trade into USDC for a profit. So it actually gives a utility to LUNC, which we don't currently have at the moment. And that's kind of bringing back some of the system that was there before. Like there was arbitrage opportunities where you could swap your LUNC into USDC for a profit. And so we're bringing some of that back again with this.
So I think that's going to be exciting times because I think there's going to be a lot of people doing that and essentially swapping Luna Classic and providing that utility. That just seems to me like it's really bullish for Luna Classic itself.
Yeah, like it's bullish for both tokens. Like I tried to make this proposal so that like nobody gains at the expense of another, that it's fairly equitable, and like as well for USDC hold. So that swap thing, it'll be great for LUNC holders and it'll drive down supply, I believe, an awful lot quicker than any burn tax ever would. And not only that, like with the burn tax, we all get punished. Every one of us is equally punished. Whereas this is only punishing people that trade below peg, and it's actually allowing profit. It's incentivizing the LUNC holders to swap into USDC and incentivizing you to cut down supply. You're being paid to cut down the supply essentially with this proposal, whereas at the moment everybody is just punished to burn down the supply. And now the other thing is it would be limited, so it would only be, the swap pool will be limited to whatever the protocol takes in. So if, for instance, swap pool's opened above peg, but we run out of USDC, the swap pool would shut again. There's no minting of USDC at the moment.
I think you know a little bit about economics here, or you have an economic background because you mentioned the word incentive. Now, when you give people incentives, they tend to do whatever they're incentivized to do. That is a really great way of looking at this problem, because if you don't incentivize people, they're not going to do it necessarily, right? If it's voluntary, are they going to volunteer to do it? Only if they benefit from it. So you're saying that there's an incentive to repeg this built into the code itself, right?
Yeah, essentially. So there's incentive to maintain the peg to LUNC holders with this limited swap pool. And then the other thing is I sent approximately half of the funds as well to create a USDC stake in our savings module. So say, for instance, the price is below peg, you'll be able to stick your funds in there or lock your funds in there. Now, I was going to do different reward rates depending on how long you locked up your tokens, but this is going to take a lot more lunk out of circulating supply, or not, sorry, take a lot more USDC out of circulating supply and help shove up the price of that as well. And it helps to give some bit back to the holders who had bought in at $1, so that their reward, they can lock up their tokens now and get some bit of reward back as well. So I think it gives something back to everybody, this proposal does, and tries to bring us back in a some way equitable manner.
Now, this is something that you've been working on for a long time, right? So when is the first time you started working on Repeg? I want to say it was sometime last year, correct?
Yeah, so like I actually started working on this back in last June. Now I'm not a quant, but I'd be quite good at maths, and I was taken into the Terra Rebels quant team and was working with Fafi and Zardar and Alex. But so if you look back then, what I was proposing is fairly similar to what I was proposing now. It was a divergence tax as well, but back then we were all about the burn, so I was just burning off all the supply and that by, do you know what I mean? So I've changed it. I think I've made it an awful lot better over the past year into something that's equitable for everybody. Um, and there's a lot more, and there's a bit more to it this time because with the staking module that have USDC holders and the swap pool as well. So yeah, I've kind of been developing this idea over the past year. So yeah, so I have been working on it for a bit of time and modifying it into something that's better.
Now, I'm assuming you took feedback from Zardar at some point. I know he had a different Repeg idea with the commodity tokens. Is yours similar to Zardar's? It sounds more simple. Is it have any similarities with his plan?
Well, Zardar's would have been different. So Zardar's was using creating partitions, but say the method for actually maintain, and he was going to have an ABSK module, which would have been something to stop kind of. I haven't actually seen what the mechanics behind that were because that wasn't fully developed yet. But I mean, you could have Zardar's partition module with my divergence tax between the partitions. That's what I was kind of talking with him about, developing something along those lines, as the method of actually maintaining maintaining the ratio between partitions or between pools. But I think he was going a slightly different route with that. And he was basically thinking that we would swap our USDC or LUNC into these other tokens. Mine is kind of more focusing on, and he was kind of more focusing on the say the IOTA end of things, whereas I'd be kind of more focusing on the Forex end of things, if that makes sense.
That does make sense. Now, you've recently got some comments on Twitter that I've seen that somebody claimed that it's just like Duncan's plan. Now, I know it's not, but here's your opportunity to tell everybody, at least in the space and anyone that's going to listen to it, why it's different and it's not the same.
Are we talking about the recent Ziggy proposal or maybe the original one? Or
Ziggy, yeah.
Yeah. See, the thing about, for me, Ziggy has changed so many times. Like, originally I was meant to be working with Duncan on what his original Ziggy was with an ERM where he was modifying the Oracle rate or exchange rate. But even if you look at that, right, he was incentivizing you to swap. He was incentivizing a swap, but you must bear in mind there has to be somebody at the under end of that swap. And where was that money coming from? Do you know what I mean? So there was going to be a point at which his proposal, if you look at it mathematically, you'd have run out of funds to make that swap. And what happened then? So I was kind of thinking of working with him on that and maybe having my protocol in place with that. But with the last Ziggy proposal with the forks and the reverse split, I just think he went a bit too far away from his original proposal. So that's why I put this one forward then. I'd still be happy if Duncan wants to work with me on this. I'd be happy with that. Like, Duncan's a smart guy. I just think he lost his focus a bit with the last proposal. So that's why I'm pushing this one forward. It's a more focused approach to USDC only and bringing back the Forex end of things.
Well, a smart man that I talked to recently lives and adheres by the KISS principle, which is keep it simple, stupid. And I think that this proposal, even though there's a lot of things that people might not understand, it is actually a heck of a lot simpler than some of the other proposals that have come out. Uh, to me, from the way you're explaining it, it does seem like a simple solution. And I appreciate the fact that you're concerned with incentivizing traders to trade, because without incentive, they're not going to do anything. They're just going to sit on their bag, right? So good on you. I like this so far, and it to me it seems simple enough to actually work.
Yeah, I tried to make it as simple as possible as well because some of my earlier ideas I had like a multiplier rate and stuff and that. So you'd, but it actually made it quite difficult then to tell what the divergence from tax was because it was getting exponential. Whereas keeping it simple and just having it exactly, you pay exactly what the divergence from market price is. It makes it fairly simple to calculate what you owe or what the tax paid would be. Um, and that's another thing about it. I think it's important that this is our money at the end of the day. So we should understand how the controls on it work. And if we have a simple control that everyone understands but is still effective, I think that's a better way of going than a complex solution that may work but nobody understands how it works. Do you know if that makes sense?
So I'm looking at the comments now, and there seems to be some questions in there. And Jabuz has one, so I'm going to read that one. And gosh, I just lost it. Hold on. Let me get back to it. Doesn't the repeg create arbitrage opportunities or complement all other currencies also in the chain as well?
Well, it would in general, but as when I'm going to start this one, I'm actually going to say that we should disable the tariff swaps because there's actually an exploit there at the moment and a problem with our Oracle price feeder. So I would be saying that we should fix that first and foremost, and then we'd work on USDC, and I'd gradually start bringing those other Terra tokens on one by one as we build collateral rather than having all 23 of them there in one go because the smaller the number of tokens you have, the more easier it is to manage. So I'd like to do that in a gradual process over time and introduce them maybe one or two at a time. So maybe introduce EUTC next and then GBTC and then JPTC, do you know what I mean? But do it in a gradual process. And that would help as well for us building into the future because we've things to look forward to. I think I can't remember who said it to me, but like I mean, you could have FOMO every time you open one of these new trading pairs, you know, the Terra pairs.
So, yeah, somebody asked about the proposal, if it's up for vote yet. That's actually happening sometime after this podcast. And I'm pretty sure you're going to tweet about it. Is that correct?
Yeah, as soon as I have it up, I'll tweet that I have it up anyway. So yeah, before tonight is out, I'll have it up for vote. Now it is only a signaling vote again, so what this will mean is that you're just indicating that we as a community support this idea, and that you support me going to the CXs to negotiate, and if they're on board with it, that's the direction we're going to choose. And it's important as well, I think, if people vote yes on this, like there's no point in us going down this road and then 2 weeks later or 3 weeks later saying, oh, putting up another governance vote to stop this. I mean, I want you to vote on this and be thinking, yes, this is the direction we need to go. I mean, we've been a bit wishy-washy with governance votes and tax rates and stuff like this, and from any outside investors looking in, it doesn't look good. But even from people working on the chain or developing ideas, it's, you know, I mean, you're a bit worried that you put this forward and then 1 month later people say, nah, we'll do away with it. And do you know what I mean? So that's the other thing. I want to make sure that people understand this, believe in it before they vote on it. And if you're not sure, don't. Do you know what I mean? We need to all believe in this approach going forward if we're to carry it through. Because I think we need to be more decisive in what we do as a community going forward.
So, with that said, would you be open to having some spaces maybe with some of the other influencers, Diamond Hands, maybe a couple other guys, just to be there to answer some questions? And I'm not saying be available for 8 hours straight. That's crazy, right? But if you could pop in for an hour every day that it's up for vote, that would be cool. I could try to help to an extent. I'm in the Philippines though, so my time, my availability isn't as quite available as maybe say someone like Diamond Hands or Matt's Market or something like that. Would that be something that you're interested in doing?
Yeah, I'd be able to make myself available. No, it's going to be. I work full time, so it's going to be have to be after my work in the evening times. But I'll make sure I'm available every day. And if anybody has any questions as well that they'd like to ask me in DM, they're more than welcome to do that. But yeah, if I know their space is on every day, I'll try and make myself available for them.
All right. Well, I think our timelines are, our time zones actually complement each other better than other people's. But typically, this is well, actually, when you get off work, I think it's what, like 10, 11 p.m. for me. So it might be something that I can do some of the days, and then somebody else can probably take over for the other days.
Yeah, I just my work in real life at the moment, we're just super busy at the moment, and I'm actually finishing later than I normally would, you see. So, it'll be quite difficult for me to take time off for that. I can try maybe one of the days do one early space, maybe for half an hour, just pop in or something like that. But uh, in general, it's going to have to be during the evening times for me, really.
Well, what we could do is just kind of play it by ear. When you get off work, you can message me or message some of those other guys and see if they're available. And I'll just make a point to listen a little bit more often to my Twitter for those times when you're about ready to get off work, and I'll try to be available and see who else is, because I think it is important. The more people understand it, the more accurate of a vote you're going to get. So I think it's very important to be able to get the word out there as much as possible.
Yeah, no, I will try and make myself available. And even if you get questions in your spaces and I'm not there, if you want to take them down or send them to me or whatever, I can try answer them and get back to you with responses. Even if you can read them out, even if I'm not there, if that makes sense, or if that would help.
Yeah, absolutely. I've had a few people send me questions already, and I've forwarded some of them to you. So I got it. Here's a question from Margic 21. Once collateralized, if an exchange were to keep allowing sells in a big DPEG event, closing positions out using own funds to cover or demand liquidity to keep customers happy, such as SBF style, would they owe the protocol any money?
Well, yes. So anybody buying, so the protocol, if we're collateralized, the protocol will be performing the buyback. So the protocol will be maintaining the peg. Um, like as we build more and more sufficient collateral, we'll push, you know, we'll be able to put the buy walls much higher. Basically, like we will be physically placing orders on the order books with the protocol. So like the we will be doing the buybacks. If somebody else wants to buy back, that's on them. And again, when you're buying back, there's no tax on your end. It's only on the seller side. So so they're not taxed anyway if they were to buy to maintain the peg. You're only taxed on selling basically. So and selling below peg. Other than that, there's no fees.
Right, in the event that it's been depegged.
Yeah. So if it's depegged and you're buying back, then there's no tax. The tax is only on the seller side.
So that's a nice, uh, that's essentially arbitrage because you can buy it back cheaper. Or am I wrong in saying that?
I'm not saying you're buying it back cheaper because say if the price is depegged and you buy back immediately, if you buy back, if you were to sell immediately, you'd be selling at a loss because you'd be selling into the protocol. So if you buy back, right, there's no fees there, but you'll still have to hold to be able to take profit.
So it's not an immediate arbitrage, but you could essentially buy it back at the DPEG price without paying taxes, hold on to it, and then move it later.
Exactly. So what you can do is that's why I kind of thought about building that savings vault or that staking protocol as well, is that you'll be actually able to put your USDC somewhere while it's under peg, gain rewards from that because the sales are below peg, that USDC savings vault, the rewards are filling up even more. So you're getting even higher return on your rewards while while it's locked up basically, and then take it out and sell it when the price is above peg. So you are making profit even while it's sitting there.
So, gosh, you get these incentives just seem to me like I'm looking at it from an economic perspective. The planning is pretty good because like literally people like to make money if they're incentivized to do things that are positive for USTC, positive for the blockchain, and that's going to benefit them, then that's the behavior that's going to be prevalent. So you're not only going to incentivize people to buy back, it's also an incentive to have it staked while during a DPEG event because they get rewarded more. Is that what you're saying?
Yeah, exactly. So if you were to lock up your tokens and the price is depegged, but bear in mind that every sell there on while the price is depegged is going to be filling up that rewards pool even more. So the rewards rate will be increasing while the price is depegged. So if that makes sense to you. And the other thing as well is I see that like a lot of things people talk about creating incentive and yes, it is definitely about creating incentive, but people must understand that that incentive, the money for that incentive has to come from somewhere. And that was a problem with a lot of the previous proposals, even Ziggy included, is that that incentive, where was that money coming from? They hadn't gotten that money from anywhere, if that makes sense. Whereas we are taking the tax protocol, or we're basically taking a tax and using that tax effectively to incentivize other areas. Whereas at the moment we're using a tax and just burning it off. This is creating incentive from this taxation and disincentivizing selling below peg at the same time.
And also, I mean, obviously, the more USTC that's staked, the more stable it's going to be, and any type of DPEG event that it does go through is going to be diminished by how much is staked.
Exactly, and the more depegs that happen, like I said, this will have to be a soft peg at first because there'll be no collateral in the protocol when we begin. But the more depeg events that happen, the more collateral we'll build in the system, if that makes sense. So the more we get hit, the stronger we become with this protocol. It's different to how things would normally operate.
Well, I'll tell you what, you got me excited. I'm going to do a deep dive now um, on your proposal, and we're going to talk again. And we're probably going to have some more questions for you. But to me, it seems like a nice, simple solution that, it's not just code. It's not just this is what we're going to do. You're also taking into account the trader's perspective and what it takes to incentivize people to make something work. And that's something that I think was lacking in a lot of the other proposals.
Yeah, like it's important to create an incentive, and like another big reason for me creating this was to prevent the DPEG events ever happening again. Like so, as long as like this is our money, so if we agree a certain value on it as a community, then and we trade at that value or around that value, then we're not punished for doing so. And it's only going to be the people that push those prices below peg that get punished for doing it. Like I don't see any reason why we should all be paying a burn tax for effectively what SBF did. I think if we had this in place, SBF wouldn't ever have done it because it would have cost them money to do it. This basically prevents anything like what happened before ever happening us again. Now, for instance, if you have a reason that you have to take your money out below peg, then yeah, you're going to be penalised for doing it. But I think as long as we all knowingly buy into it with this and vote together on this, then I think that's fine if we understand how it operates and the risks involved in it. Like it's important that we like if you look at crypto at the moment, like I think the governments are trying to create regulations because we aren't really regulating our money. Terra tried on chain, but because so much of the volume was traded off chain, it wasn't really regulated or controlled at all. So part of this is that we're regulating ourselves before the government steps in to regulate us. You know, crypto and is about decentralized and it's about being free from government regulation, but it doesn't mean that we shouldn't have our own regulations, if that makes sense. And I think that's something that's been lacking in the crypto space. And this is going to be a crypto first that we're actually regulating our own money everywhere, if that makes sense.
Makes perfect sense. So you came on a little bit early for me, and I appreciate that. but I'm not sure if we covered everything. Is there something that we missed that you wanna talk about?
Um, oh, well, just as well, I know you were talking about funding the community pool and the Oracle pool. So if you look as part of this protocol, what I've done is 47.5% went to funding the swap pool, 47.5% of the profits went to funding the USDC stakings or savings module, and then what I did is 2.5% of it went to fund the Oracle, and 2.5% of it went to fund the community pool. But the other thing as well is that if we create this arbitrage opportunity, like people have to come on chain to do it or make them swaps, then we're going to increase on chain traffic and volume anyways. So this should fill up the community and Oracle pools as well. So it'll
That
doubly do.
that's super exciting. Go ahead.
Oh no, that was it. That's basically it. So part of this it will, because of the arbitrage opportunity, it will create on-chain volume, and there's incentive there for doing it. Um, so yeah, like this kind of this proposal kind of is multi-tiered in how it operates. Like it does tend to hit a lot of areas and incentivize a lot of different areas. And the people we're making pay for those incentives are the people that are attacking our peg. We're not all paying for it. It's only we're targeting, the taxation at those that are attacking our peg price basically.
So let's talk about realism real quick, because I mean I think this has got me a little bit excited. It's got a lot of people in here excited about the future. Let's just say that it passes with flying colors. This is what the community wants. Then we go through the process. You said that there's an exploit that needs to be worked out, and there's some other things to consider. What is a realistic timeline for when this goes live?
Across the exchanges and everything. I'd have to talk more with the L1 team on this. I have had brief conversations with them, but we'd have to actually sit down and do a bit of testing on test nets and stuff as well. Like some of the stuff will be reasonably straightforward, like the USDC saving and stakings module. That won't be too hard to build. It'll be the divergence protocol and the buybacks are quite hard, and it'd be working out how much of that work will be required on our end versus how much of it will be required on the CEX end. So it'll be kind of impossible. I don't want to lie and give you a timeline without actually being sure. And it'll be impossible for me to give you that without having the discussions with the CEXs first. I'd imagine we'd be talking we'd probably start work immediately, but I'd imagine you'd be talking 3 to 6 months before you'd be able to have something like that online. That'd be just a guess.
No, that's good, because I mean, I don't want to put a unrealistic expectation out there. So these things take time. So if
Yeah,
if we're moving
I would.
forward and everything's positive, then we're looking good.
Yeah, and like if the CXs say yes and come aboard, we have those discussions. Like, yeah, I will put forward a timeline then when I'm a bit more sure, if that makes sense, so people will have a bit of a better idea of how long it's going to take to build this. Um, but I think even just the fact that we start building, it's going to create a positive atmosphere back in the community again, that we see we're actually working towards something rather than just maintaining the blockchain. And I think that's a big part of the reason we're at such a low price point now. That and the drama is that, like, while we have been maintaining the blockchain and that's great and all, like, we haven't actually made any steps towards addressing the problem of the DPEG or USDC. Whereas this is going to do that, and I imagine then the markets will react positively to that we are actually taking steps to address that. And if I think this is something that all the community will be able to rally behind, because it helps everybody, like, if that makes sense, and everybody's a chance to make money. So it doesn't do it at a cost of anybody else. The only people that get punished are the people that are trading below peg. So I think this is maybe a proposal that we can unite the community behind as well.
Well, I got to say, I like it, Redline Drifter. I want to thank you for coming on the podcast and explaining the repeg. And if do you have any last words to say? And then we'll probably end it a little bit early if you're okay with that.
Yeah, no, that's fine. Thanks for having me on, and I just want to say congratulations on becoming a father. Or about to become a father. I'm actually about to become a dad as well in June, end of June as well. So that'll be my first one. So maybe we'll have our kids on together in a few years.
Awesome. All right. Thanks for coming in and listening, everybody. This is recorded if you want to listen to it at a future date. Uh, I'm going to be talking to Redline offline as well and trying to get with some other influencers to see if we can accommodate him throughout the proposal process so that he can come on and we can get people up here and ask questions. This podcast format is set up to where he can just talk with me and have a conversation with me. But future spaces, we'll be able to have him available for direct questions from the community. And we'd just like to keep it controlled enough, too. I mean, obviously, if somebody comes up here and starts putting crazy stuff in the nest and stuff like that, then, yeah, we can't have that. So it's going to be streamlined in a way that allows it to be a very nice space for Redline Drifter to be able to answer the questions so that people can better understand the proposal. Because, like he said, I think it's very important that everyone understands what they're voting for. So, again, thank you for coming, Redline, and thank you for everybody for showing up and listening.
Yeah, thanks again for having me on, Jerry.